let's be honest, like there's hardly any reaction at all. That is the whisper number for the fiscal second quarter, the period we're currently in. Revenue's 91 billion, plus or minus 2%. The bull case was for $90 billion of revenue. We won't learn much more until the call, right? The broader story is, are they moving beyond hyperscalers to a more diverse group of customers? Like, if you were to aggregate the sell side commentary going into the print, the numbers are just irrelevant. No matter how fantastical, they're going to look a bit more deeply on the new reporting structure. You just got to forgive me and give me a bit more time to read about it, because I haven't got a clue.
Yeah.
To be honest,
well, I don't think anyone outside of Nvidia has a clue about the new reporting structure. So we'll give you a few minutes. Nvidia shares down in the after hours, down by about 2.6%. We're going to let Ed look at some of those numbers and that new reporting structure. In the meantime, we do want to note that the company reports $80 billion added when it comes to a share buyback authorization. That news crossing just moments ago now, a redhead on the Bloomberg terminal. Nvidia boosting its quarterly dividend to 25 cents a share from 1 cent per share. I want to bring back Paul Meeks, head of technology research at Freedom Capital Markets. Paul, your reaction? Pleased with these numbers?
It seems to me that everything is in order. Like everybody else in the preview commentary, the most important metric that they could release ahead of the call was this revenue guide, and it looks fine. I'm a little bit, I don't want to say dubious, but a little bit confused by the change in the reporting structure.
Yeah, wait, why would a company do that? A company like Nvidia that has such a following right now. So many analysts covering this. Some people consider it a macro event when it reports earnings. Why change reporting structure right now?
One of the things that they are doing is they're trying to build a walled garden, just like Apple did in a previous technology transition, by going beyond the GPUs and interconnecting in the data center all the different pieces. So this may not be some sort of dodge, because the company typically is first class, very transparent, but it might be just reflective that they are moving beyond just selling GPUs, and they want to organize their business to prove it.
Kunjan, let's bring you back in here, Bloomberg Intelligence senior semiconductor analyst, and just get your initial thoughts on these first few numbers.
Yeah, look, everything looks kosher. Like your earlier guest was saying, they have made us habituated to expect them to come out and expect and to beat by such a range, mid-single digits. And that's a problem. When you do that, it has become sort of a baseline, no longer something that stands out. If they didn't beat with this magnitude, that would be something worse. I do like the buyback announcement, and to address that resegmentation, I think we like that move. Look, our model has been trying to guesstimate this breakdown that they're giving in the data center business by the type of end customers for a while now. It's always painful to really get that out of them and figure it out. So we like that move, that now they are coming up and disclosing that breakdown. That also allows people to really see that it's not just the 4 top cloud customers that they're buying and running the business for Nvidia, right? There's also growth coming from other vectors that people often miss out because it was not publicly showcased.
Mm-hmm. And Ed, we are just getting a headline crossing that the company's saying that no shipments of data center Hopper products to China. How does that live up to the expectations of what you and Jensen Huang had discussed?
I don't know how you did that so quick. I literally just posted that in the blog before you read it out.
This is real time, Ed.
That's the base case assumption. What Colette Kress, the CFO, is pointing out literally in her CFO commentary as opposed to figuratively is that this is the fiscal first quarter financial year 27. The base case assumption was no product data center wise to China. So it meets that expectation. Mm-hmm. Reminding me in that note that in the first fiscal quarter of the fiscal year 26, they had almost $4.6 billion of sales in that same period 1 year ago. So that's all we're learning, really. There was some other stuff that I scanned through on the revenue highlights of the CFO commentary. I thought we'd learn more, but right now that's it. What's
the question you'd ask about that on the call if you were given the chance, Ed?
Why did you tell everyone in March that you were ramping up your supply chain and that you had both orders from Chinese companies along with the US licenses to issue those orders? why'd you say that? You know, if the state of play is clearly based on the president's visit, that China is not going to permit its tech companies right now to place those orders. And why did Ed Ludlow not ask Jensen that more explicitly on Monday? That's probably what I would reflect on.